Good morning, ladies and gentlemen. A very warm welcome to you on Business Today Television. I'm your host, Shail Bhatnagar. The fourth quarter earnings from corporate India continue apace. We have Tata Technologies, one of the largest mid-cap IT companies, declaring a stellar fourth quarter, where profit after tax rose 20% in the quarter gone by to 189 crore rupees versus 157 crore rupees a year ago and 169 crore rupees in the December quarter. The top line was a bit tepid at 1286 crore rupees, but a series of fresh customer wins against the backdrop of a deteriorating global environment because of the global tariff war, as also the emergence of artificial intelligence has created all sorts of problems for the Indian tech space. Joining me today is Mr. Warren Harris, CEO and MD for Tata Technologies, to discuss the fourth quarter performance and, of course, the way forward. A very good morning to you, Mr. Harris. A fabulous set of numbers as far as the bottom line is concerned. Profit after tax grew 20%. Could you please explain to our viewers what prompted this rise in profit and profitability?
Well, good morning, and as always, thank you ever so much for your interest in Tata Technologies. So we were very pleased with the performance, the resilient performance that I think that we demonstrated in Q4. You cited the economic headwinds that have been prevailing the manufacturing sector over the last 12 months. You know, despite that, I think we've demonstrated real operational rigor. So we've squeezed the appropriate levers from our perspective and managed to improve margins by almost 50 basis points. And then net profit, as you cited, has grown by 20%. And I think the real contributor to that is the joint venture that we've signed with BMW. We don't consolidate the joint venture above the line, but we do consolidate our share of profit below it. And that joint venture, we began trading in November. There's almost 1,000 people that we've now stood up in innovation hubs in Pune, in Bangalore, and Chennai. And that made a material impact to our numbers in Q4, and that is set to continue during the course of not just FY26, but into the future. So we're very pleased about the net profit and also by association earnings per share.
Yes. Mr. Harris, could you please explain to our viewers why did the top line stagnate? Is it something to do with the emergence of artificial intelligence? Are companies like yours finding it a little difficult to raise top line as well? What prompted the number to slip 1%?
I think the issue with regard to the softness on a revenue side of things is really related to the macroeconomic issues. You know, our customers are looking for certainty in terms of the regulatory framework in and around things like EVs. They're also looking for certainty as far as tariffs are concerned. And until the certainty is there, there's always going to be a reticence to invest and make big commitments on new products. And so, you know, we are patiently awaiting for things to change. I think the fact that our customers have been sitting on their hands for the last 12 months, you know, positions a lot of upside when that clarity comes, and we'll certainly be ready for that. You know, as far as artificial intelligence is concerned, you know, we think that represents a growth opportunity for us. You know, we announced a number of deals in the fourth quarter. One of those deals was with a tier one automotive company, and we're using the proprietary AI framework that we've developed inside of Tata Technologies to deploy that across 100 plants for that tier one automotive company. These are brownfield plants. We're rolling out sensors into legacy manufacturing assets and using the AI platform to identify opportunities for improving the uptime of those legacy manufacturing assets, identify opportunities for accelerating manufacturing throughput, and also looking to to identify opportunities for improving things like scrap rates, and that engagement is a multi-million-dollar, multi-year engagement, and again gives us confidence that AI will represent, not a challenge to the structural integrity of our business, but will represent growth.
Okay, Mr. Harris, your larger in-house peer, TCS, hired just 625 people in the quarter gone by, at a time when there is a cloud on how large IT companies could fare in this environment of rising importance of artificial intelligence. What was your net addition, if at all, in the quarter gone by as far as employees are concerned, and how do you see this trajectory moving forward? By the end of next year, financial year, would you have lesser number of people working at Tata Technologies compared with now?
Well, we're still very much committed to growing our headcount. I think because of the softness as far as the market is concerned, our headcount numbers were relatively flat in the fourth quarter. But as soon as we start to see macroeconomic clarity, I think you'll see us accelerating the additions of new headcount, and we certainly expect to be a bigger company in terms of employees this time next year. I think the challenge for us and the challenge for the entire industry is really looking for the clarity that will afford our customers the confidence to invest in the things that we will look to intersect with. So I think headcount is certainly being impacted by technology, and I certainly think that our sector in the future will not be a linear growth sector as far as headcount is concerned. I think we'll be balancing that with the investments in IP and technology accelerators, and AI will be very much a part of that. But certainly from a Tata Technologies perspective, and I can't speak for Kriti and TCS, but from a Tata Technologies perspective, we are looking to grow headcount in FY26 and grow headcount in a material way.
Okay, Mr. Harris, you are right in the middle of this whirlwind or tornado, as one might put it, as far as tariffs are concerned. Large parts of your working universe are in Western Europe, as also the United States. What are your clients telling you when it comes to this tariff war which is brewing between EU and US, and how long do you think this impact will last on companies such as yours?
Yeah, it's a great question. One of the things that we were anticipating this year, we were anticipating growth from the beginning of the first quarter. We'd seen a lot of our customers put on hold new product investment, given the elections in the United States and the runoff of EV incentives in Europe, and we were expecting that to resolve itself, given the decision in November in the US, and also the expectation that regulatory decisions would be made in Europe. The tariffs have complicated that, but our anticipation, and we're seeing this ourselves, and we're also getting feedback from our customers, is that the tariff volatility is likely to play out in the next 2 to 3 months, and then we'll know what environment that we will have to play in over the next 2 to 3 years. And I think whether you like tariffs or not, the things that the markets are looking for is just certainty. And I think as long as we get that, then I think you'll see investments. Yes. And I think, clearly what is likely to happen is that in the United States, I think you're going to see investments in the automotive industry in a relatively balanced way across the different propulsion options, in combustion engines, EVs, and plug-in hybrids. I think in Europe, because of the concerns about tariffs, I think you'll see investments being made to protect European companies from the dependence that they currently have on China and in North America. And again, all of those changes will represent the need for support from technology and from services organizations like ourselves. So we're very optimistic, medium to long term. And again, as long as the clarity is provided in the next couple of months, we're still very optimistic in terms of FY26.
Right. Mr. Harris, would you want to comment on how aerospace business has shaped up in the quarter gone by, and of course for the entire financial year? What are the headwinds that you're facing, and what are the tailwinds that you're looking forward to as far as Tata Technologies aerospace business is concerned?
Well, the headwinds are all about finding people, because we right now we can't stand up enough people in aerospace. Our business continues to grow somewhat exponentially. In last year, we almost doubled our aerospace business. We've celebrated the endorsement that we've received from Airbus. We're now part of the EMES Cubed program at Airbus. We've opened offices in Toulouse and Hamburg, and in the UK, and we're also providing now support for Airbus, not just directly, but through the supply chain as they look to accelerate manufacturing throughput and satisfy the demand, the growing demand for new aircraft. So aerospace is very much a positive for us. It's really not been impacted by the political, the geopolitical issues, and the economic challenges that automotive has been impacted for, and we certainly expect that to continue in the next couple of years. There's about 23,000 productive commercial aircraft in use today. That's expected to get to about 40,000 by 2040. So again, the likes of Airbus and Boeing can't build enough aircraft, and so that's generating a significant amount of demand that we expect to intersect with. In addition to that, I'm sure you'll know that the Tata Group is making a lot of investments in aerospace with Air India, with TASL, and the infrastructure that both of those organizations require, and we're certainly part of the support that's being provided for those investments.
Right. Mr. Harris, a bit about how customer wins have shaped up. Anything that you'd like to discuss against the backdrop of a rising preponderance of artificial intelligence? What are your customers demanding from you, and are you able to deliver that against probably this very strong advent of AI, at least in Europe and the US?
I said before that I think AI is going to be net positive for us, particularly in terms of growth. Clearly, it's going to have a fundamental impact upon not just what we do for our customers, but how we do it. And I think the good news for us is that we've been developing AI and ML applications for many, many years. So it's an environment and a technology that we understand and we know. And in the deal wins that we celebrated in Q4, the largest deal win that we had in the services sector was an AI-led engagement, the engagement that I profiled as far as the tier one automotive company is concerned. AI is going to have an impact across our entire portfolio: product engineering, manufacturing engineering, and customer experience solutions. So we're working hard to ensure that we leverage the technology to continue to differentiate ourselves in those areas. And we're very bullish and excited about the opportunity that will provide. One of the things that I think is often ignored in terms of the upside that our industry has is that as the clock speed of technology change accelerates, most of our customers will, I think, reduce their focus upon what is core, and they'll look to outsource the challenge of deploying these types of tools to organizations like ourselves. And we are, from a strategy perspective, looking to gear up and ensure that we're very much a part of that.
Okay. Mr. Harris, my final question to you. Would you offer guidance for the first quarter of FY26 and maybe the full year as well?
I think it's difficult to provide specific guidance on the full year because we still don't know when the tariff situation is going to fully resolve itself. We think it's likely to come sooner rather than later, and so we are still expecting a very good year this year. But clearly we'll need to be agile and configure our approach to the decisions that are made between various governments. I think as far as the first quarter is concerned, given the uncertainty that's out there, it is likely to be soft, and we're going to need to work very, very hard, not only to protect top line, but also to ensure that margins are not impacted. So I think it's going to be a difficult or a challenging first quarter, but I think the upside for the rest of the year and certainly medium to long term is very positive indeed.
Right. With that, Mr. Harris, thank you so much for your time. And we look forward to interacting with you a quarter hence. And within that time, the very best of luck to you, to your clients, and to your team. Thank you for joining us.
Thank you very much indeed. Much appreciated. Thank you.
This, ladies and gentlemen, was Mr. Warren Harris, the CEO and MD of Tata Technologies, a company that's come up with a fairly decent uptick in fourth quarter profit at 189 crores, despite the background of a burgeoning tariff war, as also the rise of artificial intelligence. Please remain glued to Business Today Television. There's a lot that's happening on the other side of the break. Have a nice day.
The IMF and World Bank serve